Let's say inflation is 10% a year. And if you've got money in the bank and it's earning no interest, and inflation is robbing 10% a year, after 7 years, half your money is gone.
This is a massive change. Looking not at the CPI, but at the actual cost of living in the country, it's very obvious that the inflation rate is not 7%. It's much higher than that, in that it costs more than 7% to live here than it did last year. Why is this not on the front page of every publication?
Well, because the government, Wall Street, the Federal Reserve has a vested interest in the public not understanding how bad inflation is. In fact, one of the ways the Fed's been able to justify creating more inflation is because they claimed we didn't have enough of it. But the only reason we didn't have enough of it is because they were relying on their own highly rigged CPI. You know, the CPI wasn't always this dishonest. When they compare our inflation rates to the inflation of the 1970s, we're not using the same CPI that we used then. The annualized rate of inflation so far, according to the CPI for 2021, is 7.3%. If you annualize the first 11 months, that's the worst rate since 1982. But if we were using the same CPI as we used in 1982, the rate would be closer to 15%, which means it's the worst year in inflation in U.S. history, because the highest one year was 1980 when it was 13.5%, and this year it's more than that.
So I guess I don't understand why no one's being punished for this crime. I see people destroyed, literally destroyed, for voting for the wrong person or hitting on the wrong person at a party or supporting their brother over text messages or whatever. The people who destroyed the U.S. dollar seem to be getting away with it. How is that?
Yeah, well, they just renominated Powell to a second term, as if he did such a great job on his first term. It's a complete disaster. Of course, they might have replaced him with somebody even worse. But this is the only way the government can finance all the spending. You have the Democrats now promising all sorts of stuff for nothing. We're going to get free preschool. Everyone's going to get paid family and medical leave, and no one's going to have to pay for it. Nobody's taxes are going up. We're paying for it through inflation, because the money to pay for all this government is being printed into existence, and then it's spent into circulation. And as it's spent into circulation, it's driving up prices. And when Jim Cramer was talking about all the money we're spending, yeah, the problem is we're not earning it, we're printing it, and then prices are going up. Our productivity is collapsing. We just got the worst productivity numbers in 62 years in this country. Our trade deficits are exploding. The economy is imploding. It is a mess. We just can't see it because we're blinded by all the inflation.
Right. Really quick, how long till the investors have lost faith in the U.S. dollar? That's why they're running to crypto. How long till the rest of the world loses enough faith that the U.S. dollar is no longer the world's reserve currency?
Well, people still have confidence in the dollar and the Federal Reserve. I don't know why they've gotten so many things wrong. You know, I think the people that are running to crypto are unfortunately running in the wrong direction. They're probably jumping from the frying pan into the fire. But eventually, the world is going to leave the U.S. dollar. The dollar is going to collapse. Money is going to flow into other currencies. It's going to flow into real money, gold and silver. It's going to go into real assets, stocks, real estate, mostly outside the United States, because we're going to be the epicenter of a coming currency crisis and sovereign debt crisis that's going to make the financial crisis of 2008 look like a Sunday school picnic.
Yeah, this is bigger than coronavirus or pronouns. This is big. I don't know why it's being ignored. You are not ignoring it, and I appreciate it.
So part of the reason why we're seeing inflation right now is because the United States government has so much national debt. And so they need these low interest rates and this inflation to pay back this almost $29 trillion worth of national debt with cheaper dollars. Now, what this has done is caused a lot of inflation in our economy. And like you're saying, potentially being in a stagflationary environment, the solution to that being we need to fight off inflation through things like higher interest rates. But the cost of higher interest rates that means now we have these 1-year treasury bills, treasury bonds out there, which means that when interest rates go up, this national debt becomes infinitely more expensive.
Yeah, it becomes a self-perpetuating problem because the debt is already exploding because raising interest rates causes a recession. The recession means the government collects less tax revenue, but its spending goes up because more people get welfare and unemployment and food stamps. So the budget deficit is getting bigger, but now interest rates are going up. And so the cost of servicing the debt, if you think about it, if we have a $30 trillion debt, every time interest rates go up by 1%, that's $300 billion extra to service that debt, right?
Wow.
And so if you get rates going from 0 to 5%, that's $1.5 trillion that gets added to the deficit that then needs to be borrowed in addition to the rest of it at even
Or
higher
raise
rates.
taxes.
So it just implodes. And that's why we're in a situation where the Fed is going to feel forced to monetize all that debt because otherwise it's unpayable. But the more money the Fed prints to monetize the debt that nobody wants, the more pressure there is on the dollar. So it's either a dollar crisis where we have hyperinflation or massive inflation, or we have a default. We have a bond crisis because the government defaults, because the only way to avoid default is through inflation. And I'm not talking about just moderate inflation. It's going to be very severe and potentially hyperinflation. But you also don't even want cash, because even cash is going to lose value. And especially, let's say inflation is 10% a year. And if you've got money in the bank and it's earning no interest, and inflation is robbing 10% a year, after 7 years, half your money is gone, right? And so why would you just sit back and watch your money just disappear? I mean, the money will still be there, but the purchasing power won't. And that's what really counts. It's not how much money I have, but how much I can buy with the money that I have. And if you can only buy half as much stuff because prices have doubled, that's a huge loss. So to avoid losing, you got to get rid of not only bonds, but dollars. And you got to get into real things. You got to own equity. You know, inflation transfers purchasing power from creditors to debtors. So you want to own assets and you want to have debt. That's, you know, the government is the world's biggest debtor. That's one of the reasons it creates inflation, because as a debtor, it benefits from inflation. So you want to be a debtor, but you want to have the right kind of debt. I'm not talking about credit card debt, but to the extent that you have a mortgage against your house, that's good because you actually own a house, that's a real thing, and you just borrowed paper, and you'll be able to repay the mortgage with money that has very little value, yet your house will still have real value because it provides shelter and all sorts of other things that you get from a house. But, you know, also corporations have debt. So stocks will benefit because the bondholders will get, you know, wiped out, and the stockholders will end up owning the company because the bondholders just have a paper claim. They don't have any claims to the real productive capacity of the business. They don't have any claims to, you know, the resources or whatever the company owns. That belongs to the stockholders. So what I've done personally, and what I'm advising my clients to do, is we invest in a lot of overseas stocks, value stocks, stocks that have a lot of real tangible assets on their balance sheet, that have good earnings, that pay good dividends in foreign currencies. The businesses have a lot of pricing power. They can raise prices to offset rising costs, and you know, that's what you want to own. And we own a lot of commodity related, energy, agriculture, mining, a lot of precious metals related investments, gold and silver mining stocks. These are the type of investments that will do very well in an inflationary environment, a stagflationary environment. We're invested in emerging markets. I think those markets will do very well with a weak US dollar. So you want to, you know, get those portfolios now before they become too expensive with the dollar crash.